I'm tax attorney Chad Silver, founder of Silver Tax Group. We practice tax law exclusively, and international reporting and FBAR defenses are a major part of what we do. How the IRS finds your secret offshore accounts. You think that money you tucked away in a foreign bank account, that little nest egg in Switzerland, or maybe over in the Cayman Islands, is your secret. Many people believe offshore accounts are invisible to the IRS. For decades, that belief was partly true, but today it's totally wrong. If you're dealing with unfiled FBARs or offshore compliance issues, visit silvertaxgroup.com or call 855-900-1040. We help taxpayers come into compliance, submit the required filings, and defend them if the IRS raises questions. Let's talk about how the IRS actually finds offshore accounts. The era of financial secrecy is over. It's not a matter of if the IRS will find your account, but when. And how they're doing it is something else. They built a digital Dragnet, a global surveillance system powered by artificial intelligence, and unprecedented data sharing that sees almost everything. Through FATCA reporting, automated data matching, and expanding analytics, the IRS now has a far greater visibility into foreign financial accounts than ever before. Every wire transfer, every interest payment, every stock you own, no matter where it's held, they know. And if you haven't been playing by the rules, the risk of detection today is dramatically higher than it was even 10 years ago. Part 1, the law that changed everything. For generations, the idea of an offshore account was synonymous with secrecy. It was a financial fortress, a black box only accessible to you. So what blew that fortress wide open? A law that fundamentally rewired the global finance system, the Foreign Account Tax Compliance Act, or FATCA. Passed in 2010, this law essentially deputized every foreign bank on the planet, turning them into reluctant partners for the IRS. Suddenly, financial institutions all over the world were legally required to identify and report on any accounts held by U.S. citizens. And think about that. Your bank in Singapore or your investment firm in Luxembourg is now obligated to send your account information directly to the U.S. government. It isn't a friendly request. It's a mandate backed by severe penalties for any bank that doesn't comply. This created a fire hose of data flowing directly to the IRS, giving them a clear view into the offshore world for the very first time. And this brings us to two of the most important forms of international tax. FinCEN Form 114, also known as FBAR, and Form 8938. The FBAR, Report of Foreign Bank and Financial Accounts, is required if the combined total of all your foreign accounts hits $10,000 at any point during the year. Notice that's the aggregate value. A few smaller accounts can easily push you over that line. Now, Form 8938 is filed with your tax return and is required for higher foreign asset values starting at $50,000 for U.S. single filers. And here's what people get wrong. The IRS isn't just looking for supervillains engaged in elaborate tax evasion. They're hunting for simple noncompliance, a forgotten form, an overlooked account, a misunderstanding of the rules. It all looks like a red flag to their automated systems. The simple failure to file these forms is what lands you on their radar. All right, part 2, the digital Dragnet. How do they see everything? So how exactly does the IRS connect the dots? It's a multi-layered system of automated surveillance that leaves very little room for error. First, you've got FATCA, the global reporting network. Over 100 countries now have agreements with the U.S. to automatically exchange financial data. If you're a U.S. person with a foreign bank account, that bank account reports your name, address, taxpayer ID, account balance, and gross receipts to this massive IRS database. This is where the second layer kicks in, the Automated Underreporter Program, or AUR. Think of AUR as the IRS's ultimate matching machine. This powerful computer system cross-references billions and billions of information returns it gets from third parties all over the world and compares it against the income you reported on your Form 1040. So here's some examples. Let's say your bank in Ireland reports you earn $5,000 in interest. The AUR scans your tax return to see if you reported $5,000 of foreign interest on your 1040. If it can't find a match, the system flags it. It doesn't make a judgment call. It doesn't care if it was a mistake. It just sees like this mismatch. And this mismatch automatically generates a CP2000 notice. And CP2000 is written right on the notice. And this is a letter that says, we have information you didn't report, and we think you owe us money. The real game changer is the third layer, artificial intelligence. The IRS is deploying sophisticated AI and machine learning to analyze your entire financial DNA. The systems don't just look for simple mismatches, they hunt for patterns and anomalies. For example, the AA might flag a taxpayer whose U.S. income suddenly drops, but whose FATCA data shows they hold a substantial amount of assets overseas. To that specific algorithm, this suggests you might be living off unreported foreign income. It also uses a system called the Discriminant Information Function, or DIF score. And the DIF score compares your return to millions of others and flags those returns that deviate from the norm for your specific income level and profession. You got to imagine the IRS keeps data about every single profession, what their normal earning potential is, and how that looks when reported. So when there's a deviation, that throws up a red flag. There's also like complex offshore structures like foreign trusts, which are like an immediate red flag for deeper scrutiny from the IRS. So the fourth layer is just good old-fashioned bank analysis. If you're moving money between foreign and U.S. accounts, they're going to be watching. They can perform a bank deposit analysis to reconstruct your cash flows to spot unexplained deposits. Any large wire transfer from a foreign source, especially over that $10,000 FBAR threshold, is going to attract a lot of like unnecessary attention. And finally, there's like human elements. The IRS whistleblower office has paid out over like $1 billion to informants. And new online portals make it easier than ever for disgruntled ex-spouses, former business partners, or employees to report suspected tax fraud. The world has become like a very small place, and financial privacy is largely an illusion. Part 3, the price of secrecy, penalties that will ruin you. Failing to report your offshore accounts isn't a minor clerical error. The penalties are draconian, and they're designed not just to collect tax, but to punish and deter. And they do a good job of it. They can and often do exceed the money in the account itself. So let's start with the FBAR. Penalties are split into two scary sections, non-willful and willful. A non-willful violation means that you made an honest mistake or were simply unaware and carries a civil penalty of up to $16,536 per year or per violation for 2026. But if the IRS decides your failure to file is willful, the consequences are catastrophic. A willful violation means you know you had a filing requirement, but you ignored it, or you acted with reckless disregard for the law. The civil penalty for a willful violation is the greater of $165,353 for 2026, or 50% of the highest balance in the account per violation. So let that sink in. That's 50% of the account balance for each year you failed to file. The penalties can easily wipe out an entire account. And on top of that, willful FBAR violations can lead to criminal prosecutions, jail time, with fines up to $250,000. We're talking a lot of money, and we're talking prison. Then there's the 8938 penalties. That starts with a $10,000 failure to file penalty. If you get a notice from the IRS and keep ignoring it, they can tack on another $10,000 for each 30-day period you're late, up to $50,000. And yes, this is completely separate from FBAR penalties and any penalties on the actual taxes paid. Perhaps most dangerous of all is how this affects the statute of limitations. Normally, the IRS has 3 years to audit you. But if you fail to file the 8938, the statute of limitations for your entire return can stay open indefinitely until the 8938 form is actually filed. There's no statute of limitations for civil tax fraud, and they can come after you for that at any time. Part 4, the IRS is knocking. What do we do now? Getting a notice from the IRS is absolutely terrifying, but the absolute worst thing you can do is to ignore it. Problems aren't going to go away. and it's only going to get exponentially worse. So you've got a limited window, just like 30 to 60 days to respond before the situation escalates. And here's your game plan. First, don't panic. Act immediately. Gather all your financial documents, bank and investment statements for all your foreign accounts, your past tax returns, and any letters from foreign banks. You need the complete picture. Second, you need to find the right path back to compliance. There are several programs, and the right one is critical. If your failure to file was genuinely non-willful, meaning it was from negligence or a good faith mistake, your best bet is likely the Streamlined Filing Compliance Procedures, SFCP. This is an amazing program that lets taxpayers catch up with much lower penalties. You'll need to certify your conduct wasn't willful, file the last 3 years of amended returns, and file the last 6 years of FBARs. For expats using the foreign offshore version, the miscellaneous penalties is 0%, but you had to reside out of the United States for at least 330 days of the year. For US residents, there's a 5% penalty, which is far better than the alternative. You still have to pay back any taxes and interest you owe. If your actions are seen as willful, the situation is like way more serious. Don't try to fix it on your own. You'll need to consider the IRS's Voluntary Disclosure Program, also called VDP, which offers a path to avoid criminal prosecution. Third, and I think this is the most important step, is to get professional help. The rules are incredibly complex and the stakes are way too high to go in it alone. You need a qualified tax attorney who specializes in this. And why? Because we have the attorney-client privilege relationship. So we can hear all the facts, examine all the documents without anyone requiring us to testify against you in court. Tax attorneys, we can assess your situation, determine if your conduct was willful, guide you into the right program, and handle the IRS for you. Trying to explain it yourself can lead you to accidentally admitting willfulness with disastrous results. You don't want to make any admissions, and a tax attorney knows how to frame the facts and protect your rights. If any of this sounds familiar and you're worried about an old foreign account, don't wait for that IRS letter. You got to be proactive. Being proactive is always the better move. Our firm specializes in resolving complex offshore tax issues and guiding taxpayers back into compliance through programs like the Streamlined Procedures. We know how to navigate this safely. Click the link in the description to schedule a confidential consultation and get a clear strategy for your situation. If you're concerned about an undisclosed foreign account or missing FBAR filings, don't wait till the IRS contacts you. Addressing the issue proactively is almost always the better strategy. Our firm focuses on resolving offshore compliance issues and guiding taxpayers safely back into compliance. You can schedule a confidential consultation at silvertaxgroup.com. In conclusion, the reality is simple. The days when offshore accounts were effectively invisible to the IRS are largely over. Through FATCA reporting, international cooperation, and sophisticated data analysis, the IRS now has significantly greater visibility into foreign financial accounts, and the penalties for failing to report those accounts can be severe. But there are structured programs that allow taxpayers to correct your past mistakes. File your FBAR by the April 15th deadline, which automatically extends to October 15th, and make sure all required international reporting forms are included with your tax return. In today's environment, the safest strategy is simple: full compliance. Thanks for watching. If you found this helpful, please like the video and subscribe to the channel. I'll be sharing more practical updates to help you stay compliant, protect your money, and avoid costly problems with the IRS and FinCEN.